The instinct that a stock is falling because something is fundamentally broken within the business is often wrong. Right now, Palantir Technologies is caught in a severe downward correction, fundamentally driven by a high-volatility regime shift. We are dealing with a brutal reality check, the operating facts of the company colliding head-on with a ruthless repricing by the market.
This is the core contradiction defining the asset right now. On one hand, you have a business firing on all cylinders, posting its highest ever top-line revenue growth at 85% for the first quarter of 2026. Management even raised their full-year guidance. Yet, on the other hand, the stock just suffered its steepest drawdown in a year, losing roughly 25% of its value in a single month. That massive sell-off brings us right to this critical level, $115.62. We're talking about a 34% drop year-to-date and a staggering 44% decline off its November 2025 peak. It's broken below major moving averages and is aggressively testing the 115 to 119 support zone. So the absolute crucial question is, what force is powerful enough to override record-breaking revenue and just crush the share price? Section 1. Why it is happening. The technological sovereignty shift. To find the force driving this sell-off, we actually have to look across the Atlantic. It's not a glitch in Palantir's software, but a sudden, systemic geopolitical backlash. European governments are actively walking away from American data infrastructure. The immediate trigger came straight from French Prime Minister Sébastien Lecornu. He explicitly stated that France simply cannot rely on tools developed by foreign powers. Because of this, France's domestic intelligence agency, the DGSI, is officially terminating its contract with Palantir to switch to a local French competitor named Traps Vision. This completely cracks the previously bulletproof narrative that Palantir is the irreplaceable, entrenched operating system for Western defense. And this isn't just an isolated incident in France. It represents a massive, broader wave of technological protectionism. Over in the UK, lawmakers just labeled Palantir's £330 million National Health Service contract an unacceptable point of weakness, demanding a transition to local alternatives. Germany's military has signaled similar restrictions. European nations are systematically prioritizing data sovereignty over American proprietary tech, period. Section 2. Market interpretation. The widest spread in tech. So how is Wall Street processing this collision between incredible domestic momentum and severe international headwinds? The result is absolute unprecedented polarization. We are looking at the widest price target spread for any large-cap tech stock on the market today. You've got Morgan Stanley modeling a $382 bull case, while Jefferies is holding a strict $70 bear target. That is the staggering 5.5 times spread between major analysts. Now, to be clear, they aren't disagreeing on whether Palantir's growth is real. The financial results are undeniable. The fight is strictly about the multiple investors are willing to pay for that growth in a shifting geopolitical landscape. The brutal math behind that disagreement reveals the whole story. Palantir is trading at roughly 80 times trailing sales and north of 215 times trailing earnings. Compare that to the Nasdaq Tech average of just 5.5 times sales. Look, at an 80x multiple, the stock has priced in absolutely flawless, uninterrupted global execution. It leaves literally zero margin for error or geopolitical friction. Any threat to that flawless narrative forces immediate, violent multiple compression. If you want bull versus bear stock analysis without hype, subscribe to Future Ready. Section 3. Bull Case Reality Check. The U.S. Commercial Engine. Despite the severe multiple risk, we have to objectively examine the hard data supporting the optimists and that massive $382 target. The bull case rests entirely on the U.S. commercial sector, and these metrics are practically unheard of at this scale. Q1 U.S. commercial revenue didn't just grow, it surged 133% year over year to $595 million, pushing trailing 12-month commercial bookings to $4.7 billion. With a Rule of 40 score standing at an astonishing 145%, U.S. commercial demand is physically outstripping Palantir's supply. For the bulls, this sheer scale of American corporate adoption financially eclipses any European public sector losses. Section 4. Bear Case Reality Check. Valuation Compression and Contagion. However, that $70 downside target isn't pulled from thin air. It zeroes in on structural risks that can aggressively cap the upside and force the market to seriously rethink its valuation. The bear case points directly to spreading contagion. If France and Germany successfully shift to local providers like Traps Vision, the UK might actually pull the trigger on its February 2027 break clause for the £330 million NHS contract. Domestically, the 2026 election year continuing resolution in Congress has essentially frozen the U.S. defense budget, delaying critical, high-margin military contracts by 6 to 9 months. Plus, bears argue Palantir's forward-deployed engineer model is basically high-end consulting, meaning gross margins simply won't scale like pure software forever.
Section 5, Swing Trader Frame, Volatility and Momentum Decay. All of this builds into an immediate mechanical setup for short-term market participants navigating this correction. Looking at the options market pricing, implied volatility remains highly elevated. For the immediate expiration on June 26, 2026, options are pricing in an expected move of roughly $3.66. Looking further out to August, the market expects nearly a $19 swing. These volatility zones confirm that traders are buckling up for aggressive price discovery as the market tries to figure out where the bottom actually lies. Institutional sentiment has also soured technically. Famed Big Short investor Michael Burry recently highlighted Palantir's momentum decay. He pointed out that the stock is making new lower lows on declining volume, noting there is absolutely no sign of capitulation or seller exhaustion yet. Technical indicators, like a death cross on the exponential moving averages, suggest this downward trend is fully intact. If you want bull versus bear stock analysis without hype, subscribe to Future Ready. Section 6. Long-term investor frame, platform versus middleware. Now, expanding our time horizon beyond current momentum decay, we need to understand the fundamental structural debate about the nature of Palantir's product itself, because this is what will dictate the long-term safety of your portfolio. This is the existential question governing the next decade. The core thesis on one side is that Palantir's artificial intelligence platform, or AIP, is a deterministic enterprise operating system, essentially the only secure way to manage automated AI agents. But the major risk is disintermediation. Heavily funded frontier AI labs like OpenAI and Anthropic are rapidly building native, hallucination-free routing structures. The fear is that these base layer models eventually bypass Palantir's proprietary ontology altogether, downgrading it from a vital platform into just an expensive middleware layer. But to weather this storm, Palantir has an absolutely unparalleled defense mechanism: $8 billion in debt-free cash. To put that into perspective, that is enough cash to run the entire company for years without signing a single new contract. Their pristine balance sheet gives them immense runway to absorb international public sector shocks, wait out U.S. defense gridlock, and simultaneously push their domestic commercial expansion. Section 7. What matters next? Catalysts and triggers. Ultimately, narratives always give way to actual events. The coming months hold strict, identifiable triggers that will force the next major repricing of this asset. Here is the exact timeline of risk events to watch. In early August 2026, Q2 earnings will be the ultimate test. Palantir must prove that domestic U.S. momentum is expanding fast enough to completely offset international declines. Then, this autumn, the independent commercial review of the UK NHS contract will release its preliminary findings. Finally, February 2027 marks the strict date the UK can legally trigger the break clause on that £330 million deal. If you want bull versus bear stock analysis without hype, subscribe to Future Ready. As we conclude this breakdown, we were left with the ultimate objective question governing Palantir's trajectory. Can Palantir compound U.S. revenue fast enough to outrun a massive valuation reset? Or is an 80x multiple an impossible hurdle in a new era of technological protectionism?